Bryce Crocker, Jervois Mining Chief Executive, joins us live from Melbourne now for more. Bryce, thank you very much for joining us. We appreciate your time on the program today. Talking about a bit of momentum that we are watching in the last couple of months, certainly in the cobalt price there, but stockpiling in particular, that seems to have been at the heart of it. Why all of a sudden have we been seeing a rising stockpiling there of cobalt? Does it come down to an expectation perhaps that prices could rebound in the next few years and therefore producers have been building up their inventories?
I don't think it's necessarily just purely around stockpiling itself, but certainly there's a perception in the market that cobalt prices have bottomed. There was clearly a significant excess inventory as a result of large oversupply in 2018, coming particularly from the DRC, largely from artisanal sources in response to very high prices. And those additional units that were coming out of Africa, they were relatively high cost, and so as those inventories built up, created downward pressure on price. We're now starting to see the market equalise, and I'd suggest that at these kind of levels, we've essentially reached a floor. Obviously, Jervois is associated with moving forwards and finding sources of cobalt outside the DRC to move forwards and support the electric vehicle revolution. So we're positive on the market moving forwards from here.
Yeah, well, just on that electric vehicle revolution, obviously it is the talking point at the moment, certainly with the political moves as well. The announcement by Labor with those electric vehicles to make 50% of all new cars electric by 2030. What is your expectation on, say, though, those commodities? I mean, it's not just cobalt, I guess, that adds to that. It's nickel, it's lithium. How much do you think, these commodities will help to fuel the rapid adoption of these electric vehicles?
Well, I think that the electric vehicles is real. Certainly Australia has been a laggard in terms of global adoption rates. But where the adoption rates are now, you're approximately, say, between 1% and 5%, depending on the jurisdictions, with China leading. Obviously, there's exceptions, such as Norway, where a very, very high percentage of new vehicles, nearly the majority, are essentially electric today. But as we roll forwards, essentially electric vehicles are going to be the way of the future. The internal combustion engine, car makers aren't committing any capital. There's no R&D going into optimising the technology any further. And so the level of adoption rate, it's going to take time to be implemented. Obviously, it's also contingent on appropriate charging infrastructure, etc., and particularly contingent on appropriate commodities, particularly for the cathode of the lithium-ion battery, which, as you note, is cobalt, nickel, predominantly. And the outlook for those commodities, not today necessarily, but certainly as you start rolling forwards to 2025, 2030, we're talking about very, very high multiples of what is currently going into those uses today.
So as an investor, I'm interested here as to how we gain exposure here. We so often talk about these big iron ore players that are listed on the market, or we talk about the big energy stocks, and we follow some of those, obviously, those dominant commodities. But as an investor, what is the best way for us to get exposure to some of those commodities that you talk about, like cobalt, nickel, etc.?
It's very difficult, and that's really why we, as a group of ex-Glencore executives, created Jervois. Most of our relationships were with large institutional investors. They wanted to write large tickets into the space, but they essentially can't. Cobalt historically was a niche commodity. It's arguably still niche today insofar as 110,000 tonnes total global demand supply approximately. So obviously it's a fraction of the volumetric supply of other major commodities, bulk commodities such as coal, iron ore. And there's no real genuinely attractive way to play it as a Western investor. Certainly most of the companies are small developers. What we're looking to create at Jervois is something that has scale, liquidity, multiple geographies, but also importantly, we're looking at East Africa, because we believe that if you're going to be a significant cobalt producer and you say you're not going to get involved in Africa, by default you're also saying that therefore you're not going to be a major commodity cobalt player, because Africa is so dominant. But equally, it's about finding exposure to Africa that doesn't necessarily involve the DRC. So we're focused on the geological trends of Africa, and particularly the DRC, but perhaps across the borders in countries like Uganda and Tanzania, which are obviously significantly more stable. In conjunction with that, we're also focused on moving ahead projects in the developed world, because there is a real strong push from battery makers and from automakers to be sourcing raw materials and not be reliant on artisanal production from the DRC.
All right, fantastic. Look, Bryce, unfortunately we're out of time, so we'll have to wrap it up there, but really fascinating conversation. Thank you so much for joining us on the program today.
No problems, Leanne. Thanks very much. Thank you.